All right. Welcome back, everyone, to Eco Wealth Lab. So glad to have you with us again for another deep dive
Absolutely.
into the world of crypto.
Always a pleasure.
But before we get into the nitty-gritty today, a little favor to ask.
Mm.
If you happen to have that friend, that one who thinks, uh, you know, Dogecoin is still just like a cute little meme
Right.
and has no real value.
Bless their hearts.
Yeah, bless their hearts. Or maybe they think DeFi is, I don't know, something you order at a fancy restaurant.
Okay, I see what you're getting at.
Do us a solid.
Yeah.
Send this deep dive there. Yeah,
Good to spread the knowledge.
exactly. Sharing is caring, especially in the crypto world,
I
right?
couldn't agree more.
So, for those of you already knee-deep in the digital asset game,
Welcome back.
welcome back. Today, we're going to be picking up where we left off.
Building on what we've been exploring.
Exactly, exploring those key trends.
And diving into some recent news.
Yes, because let's face it, keeping up with crypto news, it's like, I don't know,
It's a whirlwind.
it's a whirlwind. It's like trying to solve a Rubik's Cube while riding a unicycle,
I like that analogy.
There's always something new, always some twist and turn.
The market's constantly shifting.
And it can change so fast. We've seen some serious volatility lately.
Absolutely. Volatility is the name of the game.
So that's why we're here, to be your guides through this jungle of information.
Cutting through the noise.
Exactly. We'll sift through the articles, the reports,
All chatter.
all the chatter, and we'll bring you the stuff that actually matters, the key takeaways.
The insights you need.
That's it, the need to know to help you navigate this crazy world.
Precisely. We're not just reporting on these events.
We're going deeper.
We want to understand their significance, connect them to those broader trends.
Right, see the bigger picture.
And ultimately help you make more informed decisions
Exactly, that's the goal.
in this ever-evolving space.
Okay, so first up, let's talk about that elephant in the room, shall we?
You mean the market crash?
The market crash on April 9th. It was
A bit of a shocker.
it was a shocker. It felt like a punch to the gut, didn't it?
It certainly caught many off guard.
So on that day, the crypto market took a major hit, lost about $100 billion.
Yeah, that's a significant chunk of change.
That was about a 4% drop,
Yeah.
bringing the total market cap down to around 2.43 trillion.
2.43 trillion, that's still a massive number, but that drop is noteworthy.
It is, and what's interesting is what seems to have triggered it.
Oh, this is where things get interesting.
Right, because it wasn't some internal crypto event.
Right.
It was something completely external.
Unexpected, too.
Completely unexpected, the U.S. slapped a massive 104% tariff on goods from China.
Wow, 104%. That's a huge tariff.
Huge. And I can already hear some of you thinking, wait, what? How does that affect my Bitcoin?
Right, what's the connection?
That's what we're here to explain.
It's all about investor psychology.
Oh, tell me more.
Well, when you have something like this, a sudden big tariff, it creates uncertainty.
Uncertainty in the global markets.
Exactly. Investors get nervous. They start thinking, uh-oh, is this the start of a trade war?
And what do they do when they get nervous?
They run for the hills. They move their money to what they perceive as safer assets.
So out of crypto and into any gold, government bonds, things like that.
Exactly. Things that are considered less risky in times of economic turmoil.
So basically, crypto got caught in the crossfire even though it had nothing to do with the tariff itself.
Precisely. And this really highlights how interconnected the crypto market is with global finance.
Yeah, it's not this isolated island anymore.
Not at all. And it's sensitive to those macroeconomic shocks like this tariff situation.
And it wasn't just crypto. Even traditional markets took a hit. The S&P 500, its worst day since 2008.
So it was a widespread ripple effect.
Big time. So
Yeah.
Bitcoin, as the king of crypto,
The bellwether, if you will.
the bellwether, yeah, it definitely felt the impact.
Oh, yeah. It took a tumble.
Down to a 24-hour low of $74,589.
Ouch.
Ouch is right. And at the time of this recording, it's hovering around, let me check, $77,140.77.
Okay, so still down, but trying to recover.
Trying to claw its way back. But the trading volume is huge, over $32 billion in the last 24 hours.
That high volume during a price drop, that's a sign of panic selling.
People getting spooked.
Absolutely. And it wasn't just Bitcoin. The altcoin market followed suit.
The whole gang was in the red.
Pretty much, we saw major declines across the board.
Ethereum down over 6%, XRP down about 3.15%, Solana down around 3.06%.
It's like a chain reaction. One domino falls and the rest follow.
And this just shows how everything's connected in the crypto market when sentiment turns negative.
Most assets tend to ride that wave down,
Yeah, it's tough to escape the current, so to speak.
especially when the overall mood is one of fear.
And speaking of fear, the crypto fear and greed index, it took a nosedive, plummeted all the way down to 15, which signals extreme fear.
That's a pretty clear indication of how spooked investors are.
Definitely. And it's not just the price drops, it's also the drop in trading volume.
Yeah, daily business volumes were down almost 35%, down to $124.4 billion. People are holding back, waiting to see what happens next.
Sitting on the sidelines, watching the storm pass, hopefully.
But as with everything in crypto, there were a few surprises.
There always are, always some outliers.
Right, some coins actually went up, despite the overall crash.
Defying the odds.
Exactly. HYPE, IP, and JSMY, all of them gained over 3% in the past 24 hours.
So even in a bloodbath, there are pockets of green.
It just goes to show individual projects, specific news, they can buck the trend.
It's a reminder that crypto's not monolithic. Different factors are at play.
And sometimes those factors can create opportunities even in a downturn.
But then, of course, you have the other side of the coin.
The ones that got hit extra hard.
Yeah, some altcoins really took beating.
More than just a minor dip.
Yeah, AB token, for example, plummeted over 23%.
Ouch, that's rough.
Near Protocol, down over 10%. EOS, down over 8%.
Those are significant drops.
And those probably reflect specific issues of those projects on top of the overall market fear.
Right, it's a combination of factors, but the impact is definitely amplified.
So the big takeaway for you, our listener, is that volatility is the name of the game.
You gotta be prepared for these sudden swings.
And also, global events, even those that seem unrelated to crypto, they can have a huge impact.
And it's all interconnected.
And that's why risk management is crucial.
Couldn't stress that enough.
Now, the day after the crash, April 10th, we got another important piece of economic data.
The CPI release.
The U.S. Consumer Price Index, or CPI, for March 2025.
Ah, inflation data. Always a big one.
So for those who are new to this, why is the CPI so important?
Well, it tells us how much prices have changed for everyday goods and services.
You know, groceries, gas, rent, all that.
Exactly. It's basically a measure of inflation.
And why do we care about inflation, you ask?
Because it affects everything, especially the Federal Reserve's monetary policy.
The Fed, they're the ones who set interest rates.
And their decisions can ripple through the entire economy, including crypto.
So lower inflation usually means the Fed can be a bit more relaxed with their policies.
Which can be good for risk assets like crypto.
It can create a more favorable environment.
Yeah.
So what do the CPI numbers tell us?
Well, for the 12 months ending in March 2025, the overall CPI increased by 2.4%.
So prices went up 2.4% on average over the past year.
That's the year-over-year change.
Right, but if you look at the month-to-month change, the CPI actually decreased by 0.1%.
So a tiny dip, but still a dip.
And the core CPI, which doesn't include food and energy, it increased 2.8% year over year.
And 0.1% month to month?
So a mixed bag, but it seems inflation might be cooling off a bit.
Could be a sign of things to come.
And it's interesting how much attention the crypto community pays to these reports.
They're becoming more savvy.
Definitely, they realize macroeconomics matter.
I even saw someone on X at Billionaireson mentioning the CPI release a few days prior.
People are marking their calendars.
It's become part of the crypto calendar.
So how do we interpret this CPI data, especially after the market crash?
Well, that slight monthly decrease in the overall CPI, that's a positive sign.
It could mean inflation's easing up,
And that could lead to a less aggressive Fed, which could be good for crypto.
potentially paving the way for a recovery.
Maybe encouraging those sideline investors to jump back in.
But it's just one data point. We need to see a trend.
Exactly. One swallow doesn't make a summer.
Now, let's move on to something completely different.
A different kind of market mover.
The Do Kwon saga continues.
Ah, yes. His U.S. court hearing took place on April 10th.
And for those who might have forgotten, this is connected to that massive Terra Luna collapse back in 2022.
$60 billion wiped out. It was a major blow to the entire crypto market.
Shook investor confidence, showed the risks of those algorithmic stablecoins.
And Do Kwon, he was the co-founder of Terraform Labs, the company behind it all.
So this hearing was a key moment in trying to figure out what happened.
And what the legal fallout might be.
But it wasn't the final chapter, was it? There have been delays, and the amount of evidence is crazy.
It's a mountain of data, over 4 terabytes.
4 terabytes. That's like, I don't know, millions of
That
documents.
shows how complex this case is.
And Do Kwon's facing some serious charges. 9 felony fraud charges.
This is not a slap on the wrist.
Not at all. So for those who need a refresher, How did he end up in a U.S. courtroom?
Well, after the collapse, he went on the run, tried to avoid authorities,
International man of mystery,
until he was caught in Montenegro.
and extradited to the U.S. last December.
He's pleaded not guilty to the charges, which include securities fraud, wire fraud, market manipulation.
It's a laundry list of accusations. So what does this mean for the Terra ecosystem, for tokens like LNNA and LUNC?
It's a huge overhang. Depending on what happens in this case, it could have a major impact.
More delays, plea deals, a trial, all of those could affect investor sentiment.
And if there's any negative development, it could further erode trust, push those prices down even more.
On the flip side, if there's a positive development, which is unlikely given the charges, it could offer some relief.
But the long-term recovery of the Terra ecosystem, that's a big question mark.
So anyone still holding LUNA or LUNC, they need to pay close attention.
Absolutely. This legal saga is far from over, and it's going to continue to influence the market.
It's a major factor. Now let's switch gears again and talk about something more upbeat.
Paris Blockchain Week.
It wrapped up on April 10th.
A big event in the crypto world.
Huge. For those who don't know, it's one of the biggest blockchain and crypto conferences.
6th edition this year, held at the Carousel du Louvre, over 9,000 attendees.
The who's who of the industry, experts, developers, investors, regulators, everyone's there. So what kind of topics do they discuss at this crypto extravaganza?
Oh, it's a wide range, from the basics of blockchain technology to Web3, NFTs, DeFi,
Buzzwords.
all buzzwords, and a lot of talk about regulation, innovation, market trends.
The big picture stuff.
Exactly, and it's not just small startups.
No. Big players are there too.
Big time. Santander from the finance world, Securitize for digital asset security, even Shell was there.
Wow, Shell, the oil giant.
It shows how mainstream blockchain is becoming.
It's not just a fringe thing anymore. Now, we don't have any specific announcements from the final day, April 10th.
But that doesn't mean nothing happened.
Exactly. These events are breeding grounds for partnerships, funding deals, breakthroughs.
You might see a new DeFi protocol announced, advancements in NFTs, regulatory clarity.
Things that could have a long-term impact on the market.
It's about those connections, those conversations that happen behind the scenes.
So even without those flashy headlines, it's worth keeping an eye on what comes out of Paris Blockchain Week.
It's a glimpse into the future of the industry.
Okay, so we've covered a lot in this deep dive.
Quite a whirlwind tour.
We had the market crash triggered by those tariffs, the CPI release, the Do Kwon hearing, and Paris Blockchain Week.
4 major events, all interconnected in some way.
So let's try to piece it all together. What does it all mean for our listeners?
It paints a complex picture, but the crash, it's a reminder of crypto's volatility.
And how it's linked to the global economy.
Risk management, essential.
Absolutely. Then we have the CPI data, a hint that inflation might be easing.
Which could lead to a more favorable environment for crypto.
But we need more data to confirm that.
Right. One data point isn't enough.
Then there's the Do Kwon saga, still ongoing, a major factor for the Terra ecosystem.
Those holding LUNA or LUNC, they need to stay informed.
And finally, Paris Blockchain Week, a sign of innovation, adoption, and maybe even some future regulatory clarity.
All these events, they're contributing to the overall narrative of crypto.
Shaping the market, influencing sentiment, it's all connected. And it's also interesting to see how some coins like HYPE, IP, and JSMY, they defied the crash.
Shows that even in extreme fear, there can be opportunities.
But we have to be careful, not read too much into those isolated gains.
It's all about context, understanding the bigger picture.
So, to sum it all up, the market's volatile, inflation might be cooling off, the Do Kwon case is ongoing, and innovation continues.
A lot to digest, but it's the reality of crypto.
And that brings us to the end of our deep dive today.
Time flies when you're talking crypto.
It really does. We've unpacked a lot. From those tariffs to the CPI to Do Kwon and Paris Blockchain Week.
A lot to think about.
And we hope this helps you make more informed decisions.
We can't give financial advice, but we can provide information and insights.
And with that, we want to leave you with a final thought.
A parting shot.
If the market can react so strongly to something like a tariff, something seemingly unrelated to crypto,
what else is out there that we're not even considering?
what other black swan events could shake things up?
It's a good question to ponder.
It is food for thought. So thank you again for joining us on EcoWealth Lab.
We appreciate you tuning in.
We love exploring this space with you.
It's a journey, that's for sure.
And we want to hear from you. What were your key takeaways today?
What resonated with you?
Any questions, any thoughts? Share them with us on social media, in the comments, wherever you listen.
Let's keep the conversation going.
We're all in this together, learning and growing in the crypto world.
Until next time.
Until next time, stay curious and stay informed.